This is the video for Friday, March the 19th, and we didn't get a lot of good news from the McClellan oscillator. It ticked up only a tiny bit, but it shows that the bears have taken control and the money is flowing out of the market rather than into the market. But we did have an overbought position just a week ago, and we've been paying for it ever since. And the market really, all the market averages, except the NASDAQ, have really been quite high. And the pullbacks have been pretty minor. The advancers to decliners look something like this, but look at the volume in the Dow. And we're going to take a look at a Dow heat map in a second that I found on the web. Here's the advancers and decliners. Not quite 2 to 1, but what's bad is that although the Dow recovered after its open, it dropped into the close. NASDAQ didn't do so badly. It recovered around 10 a.m., as did the S&P 500, and then there was some selling into the close. You can look at the heat map here and you see that the financials got hurt because of a decision by the Fed. Healthcare looked pretty good, and then your big stocks were sort of mixed, your Microsoft, Apple, Google, and Amazon. But let's take a look at just the Dow on a heat map, and look at where we see the stocks that were hurting. Visa down 6%, Nike down 4%, and Caterpillar down 2.3%. So they were the ones that took the brunt of the selling and drove the volume that you saw in the Dow. Now let's look at the let's look at the charts. The Dow Jones pulled back below the 127.2, but got held quite nicely by one of those moving averages. Let's take out the 9. It got helped quite nicely by the 8. The NASDAQ ticked up a little bit with resistance right at the cloud, and we have the cloud and the 8 EMA that were roughly in the same place. So that was resistance. And our high of the day was right here. Let's move that green line right up there so that we can go back and look at the Chiku span, and you can see the Chiku span got its resistance right on the coincidentals of the 250s there. So again, Chiku span showing us where daily resistance is. Remember that. If you're drawing charts in Motive Wave, it's really great because you can tell Motive Wave to plot, for example, a daily average or a daily cloud or a daily Chiku span on top of any time frame, 5 minutes, and you can see when the price is moving on a 5-minute basis right towards a daily moving average or a daily Chiku span. It's really a great tool. And by the way, they have a sale starting next week at 25% off. Just ask me if you want a link to a free trial, or check for the link in my Twitter account. So we're going to look at the SPX now. The SPX had this kind of a hanging man day, but look where the Chiku span stopped, right at the top of the candle. So this is really, really important. Again, the Chiku span tells us where resistance and support is. Let's look at some of the other stocks really quickly now. ALEC had a big day, up 1.24%, popped, but so did a bunch of other biotech stocks, a handful of them. So it wasn't just good news coming out of ALEC, but I did add 200 more shares, just over $20. So now I've got 600 shares. I'd probably like to get up to 1,000 shares and then I'll call it a day there. But here's where we want to set the alert. Right here, this is over its previous high. So we always look for an opportunity to buy when we make a higher high, and we get out when there's a lower low. The Chiku span was stopped right there at the top of the candle, which is important. So zoom in here, and you can see the Chiku span almost got out of the top of the candle. So let's consider that above the candles now, above the candle bodies at least, and we can expect to see ALEC continue to move up. Nice little move there, nice little stock. Apple finished at the bottom range of its day. Philip DeWitt, who's been writing about Apple for 30 plus years, has a great little blog that's free as well as a subscription service. And he's quoting a bunch of analysts who are really saying that the second quarter for Apple which ends at the end of March, is going to be a great quarter because it's going to be compared to last year's quarter, which had a full month of COVID closures in it. ABBV was up a little bit, still reeling a little bit from that big sale last week. Chikuspan now is not only in the cloud but below the candles, so that's not really good. IBM, nothing really to see there. BLDR finished in this hanging man here, still not an opportunity to buy. Pretty soon I'll just get tired of this stock and I'll probably take it off my watch list, but I'm sure glad I did get out of it, and I used the money to put to better use somewhere else. Home Depot had an unusual day, down 39 cents, although it sure doesn't look like it from this chart, does it? That could be after hours or something, but anyways, it had a pretty good day. It was really popping. So this is a stock that's now running away. As I said, the financials were down. NEO, love this little NEO stock. What I like about NEO is that it's so range bound. It's just a great stock to be selling options in. And right now, the only options I have are the June 60s because I just expect the stock to continue to do nicely. I want to benefit from it moving up, but then if it does move sharply down, I want to be able to have those short calls and take some kind of joy, of pleasure out of it by taking some profits. But it's just a stock that I'm going to hold on to for a long time. PRGS, stock is no longer following the CD. It just saved itself right here by ending above the 50. But pretty soon we can say that this stock is not going to follow this Gartley pattern, and we might want to stop looking at it. What else do we want to look at? Square, of course. There's another stock that just, look at the size of these candles, how it just gyrates. Rejection on the cloud. Draw a line here and see that it actually came below the 50 and below the cloud on the Chikuspan. So it seems like the day was really ruled by the cloud. Remember, looking forward, we're looking forward to this red zone here, but it's starting to close up, and if this keeps going, we're going to have this cloud flip so that the bottom one, which is A, and the top one, which is B, moves into the proper orientation. The top, which is the Senkou span A, and the bottom is the Senkou span B, and then we'll go back to a yellow cloud. And my experience is that when you have these little valleys like this, the stock tends to come down to test this area, to look at it, and sometimes just jumps over a little valley like that. Anything else that we want to look at? AT&T is still just a strong stock, continuing to chug around. Somebody asked in the comments the other day, does it look like the dividend might be pulled? And that may be why the stock is pulling back. Well, the stock really isn't pulling back. If you look at it on a daily basis, you can go back to last year, and it's pretty much flat. It's just people enjoying that lovely 7% dividend. And, in my opinion, continuing to add, but you can always look at the volume and get rid of these things here. And the volume is really telling us that there's nothing really exceptional going on. There's no strong selling, no strong buying. It's just a stock that people look to in times of uncertainty because of its dividends. So when you see the market going down, AT&T typically goes up. And so do other high dividend stocks. So keep an eye on that. Facebook. Somebody did ask if we could take a look at Facebook. So the video is finished now for the day, but I do want to take a look at Facebook for that request. So let's pull up a new one here, and let's go into chart, and let's just type Facebook, and let's take a look at Facebook. So we haven't really had any RSI days that have been exceptional, where it's been moving more aggressively than the market. So let's just go back to looking at the regular bars and the regular Ichimoku. Come on, do it for me here. There we go. And Facebook had a really up day yesterday. So I forget who was asking the question, but if you jumped into Facebook, that's pretty good. It's stochastic momentum indicators say on the short term it's overbought, but on the slower moving longer term it still has a way to move up. So before this blue one hits its top overbought, we're probably going to see another cycle of the faster moving one moving slightly down, but the longer term one, the slower moving one, should continue to move up. Looking at some long ago Fibonacci's that we drew, we have 178.6 pullback, which is the same as here, which is roughly the same as here. So we've got some sensitivity to this particular Fibonacci. Lots of stuff here. Let me just get rid of the Ichimoku so that we're just looking at moving averages. So we've got the 50 moving up. This is encouraging. We've got the 8 sort of going parabolic on us here. We have the 200s both moving up. So the momentum is certainly in the stock. You could take some trend lines here and do something like this, and maybe something like this, and you can see that the stock itself range is starting to tighten up, and now we have this breakout. So it certainly is in a buy pattern here. It finished back here in 2020 after the COVID dropped. It finished a beautiful bat pattern, then channeled sideways, and then just took off. So we should try to see if we have another pattern starting to build up here. So for that, we take motive waves auto-harmonic, and we just cover this area here, and it doesn't see a pattern. The pattern might have been here, down to here, up to here, but then it came back down to its bottom. So that's really, there's no Gartley pattern in there. So this is a stock, yes, that is going to do better. And this is coming on the news that Apple's iOS 14.5 that was going to really hurt the privacy, with its privacy limitations, was really going to hurt companies like Facebook. Facebook sort of intimated on Friday that they may have found good news and they may have found a way to invade your privacy despite iOS 14.5. I hate Facebook. It may be a great stock, but I'm too ethical to trade Facebook. I just don't like the fact that it's reading everything I do, and I'm positive that Facebook reads my emails because it's tried to match me up with somebody on Facebook that it could only have identified through an email contact or an item that I made in my calendar. So that's scary. I don't want anything to do with it. So that's all for today. Sorry I went so long, but the last 3 or 4 minutes were on this new stock, Facebook. So I forgot who asked about it. Thank you very much for the comment. But yes, this is a stock that you can buy. And the next buy point would be right up here at 297. But then expect where this minor Fibonacci is to have resistance. Why? Because it's coming up near this previous high. And there's going to be people who bought up here and up here and up here who suffered. And now that if this is coming back, they're going to want to get out. So these people who just want to get their money back, who bought up here at 305, just want to get their money back, they're going to get out. So there'll be lots of sell orders down in this area here. Look at all the buying that took place right back here. And then big buying yesterday as well. So good stock.